I am Sharon Monteith. As Andy let you know, I am an Accounting and Financial Reporting Director at RSM. We're an audit, tax and consulting firm in the UK, and we've also got a wider presence internationally as well. We service in the main 8 industries, so we've got 8 key industries, of which not-for-profit sector is one of those. So it's a very important sector to us, and we look after clients in that sector across our audit, tax and consulting practices, and we've got specialists to help in this particular sector. I personally head up our finance function support team that helps those in the social housing, education and of course charities sectors, and I lead my team to help where we can. Hopefully I'm going to be going through with you today. We're going to start off with trustee responsibilities and guidance. I think you might be able to see why they put me on first, because it will go up from here once we finish talking about responsibilities. Then we're going to talk about finance functions in the sector, and then I'm going to give you a little bit of an update about FRS 102, because in my world it's very exciting times and we've got a new charity SORP coming out which might make some differences to you. Yeah, I can see some of you might not be as excited as me about that, but there we go. Okay, so we'll cover the trustees' responsibilities, and I'll be quite brief about this because I'm sure you're all well aware of them. But the Charity Commission have got a strategy for 2024 to 2029, and they've got 5 key priorities that they set out. And priority 2 is to support charities to get it right and then to have robust action when it goes wrong. As part of the bit of them helping you to get it right, they're really making improvements to the guidance that they're giving out to the sector. And it has been really evident in the last couple of years. So they're actually bringing out new guidance. So there's been guidance on things like social media, which is really important in this particular sector. They're refreshing older guidance, and we'll cover a little bit of that later on. And what they're also trying to do is deliver their guidance in slightly different formats, so it's a bit more user-friendly. And that's why I'm steering you towards these 5-minute guides. There are 7 of them, which cover some really key areas, and they generally come from the Bible, that is the essentials for trustees, what you need to know and how you need to do it. So that piece. They've got 7 5-minute guides. They're really good for new and aspiring trustees to have a look at. They're also good for existing trustees to kind of refresh their knowledge on what their responsibilities should be. They've set them up. They've got 5-minute videos. They've also got a little bit of narrative, and they give you links into the more detailed guidance where you might need a bit more help. So I really would recommend them. What they've also really kindly done is that they've set up a quiz at the end of them. So if you're brave enough to take the quiz, you can see how much you were concentrating while you were reading through the guides. I have taken the quiz, and I'm not going to lie, it was a bit nerve-wracking as I was waiting for the scores to come in, but I did get 100%, so I was quite happy with that. The main one that we're going to concentrate on today is, you won't be surprised, the managing of finances. So the key areas that they look to deal with when you need to manage your finances, and they're all laid out there. Firstly, and not unsurprisingly, is effectively protecting your charity's money. Are you as trustees happy with the processes that you have in place to ensure that your charity money is being spent appropriately, that it's being spent on the charitable activities that your purposes are there for, that it's being spent in line with the funders' guidelines? So if it's restricted funding that you've got, that you're staying within the restrictions of that funding. Do you know what you have and where it is? And I know that sounds like a really odd thing to say, but I have come across charity clients that have found mysterious bank accounts that have just turned up out of nowhere, and investment funds that were long forgotten about and not included in their charity's records. Have you done things to reduce the risk of fraud and theft within the organisation? And are you happy that you've got risk management procedures in place that reduce the risk to a tolerable level for your charity? Do you know your charity's financial position? And not necessarily just at the end of the year when you get your financial statements to your board to approve. Are you getting regular financial information? Are you getting a budget that is set in accordance with the activities that you want to achieve for at least the next 12 months? And are you getting information that tells you how you're doing against that budget? Are you happy that you're going to be able to raise the funds that you need to achieve that budget? Have you got a plan for that? Are you getting the information that allows you to understand that you're going to meet that plan, or if you're not, that there's going to be other activities that you need to do to cover that shortfall? Do you have a reserves policy? And I suspect most of you do, but how regularly do you review it? The reserves policies at the moment, it seems to be coming to the fore, largely because of the economic conditions that we're in at the moment. And of course, you have to talk about your reserves policy in your annual report at the end of the year as well, what it is and how you're doing against it. Do you know how you're doing against it as you go through the year? Or is it a shock when you get to the year end and discover what that little bit says within your annual report? Are you happy that you're keeping accurate financial records? Do you know what kind of system you use to keep those financial records? And are you happy that your fund accounting is up to date as well? One thing that we see very regularly within charities is that they're actually very good at keeping the day-to-day transactions recorded, but the thing that they do at the year end is look at how these account within the funds that they've got. So their endowment funds, their restricted funds or designated funds. And then it becomes quite a long, arduous process at the end of the year to try and work out what's been spent where, and hopefully that you haven't overspent on your restricted funds. Are you able to deal with your financial problems quickly? Do you get expert advice when you need it? And are you aware of the serious incident reporting responsibilities that you've got with the Charity Commission? There's also an area where it talks about expenses and payments to trustees and the need for policies and the need to understand what you can and can't pay your trustees for. So that's all the areas that are covered in your 5-minute guide. So hopefully you'll be able to take that part of the test now quite easily. So we're going to go into some more detailed guidance now, some of which is the guidance that I talked about that's been refreshed. So we've got CC8, which is internal financial controls for charities. So do you know how good your financial controls are? CC8 was refreshed in November 2024, so it really is well worth taking a look at this if you haven't looked at it for a little while. It covers all of the areas that you can see coming up on my slide now, so income, expenditure, related parties, assets and investments, loans, gifts and hospitalities, and it goes into quite a lot of detail in those. There is also a really handy checklist that they provide as part of this guidance that you can do a self-assessment on your charity's financial controls, and I think if you haven't thought about your financial controls for a little while, it really is well worth doing that. All charities need financial controls regardless of their size. They help to protect the charity's assets and get the most out of your charity reserves. Your financial controls should cover all aspects of how your charity handles its resources and assets, including its money, and also how you store things like your personal data in line with those GDPR regulations. The types and levels of financial controls your charity need will very much depend on the size of your charity and the activities of your charity. For example, you need to think about your charity's size, its structure, where your charity operates, what your charity does. And some of the key financial controls for charities is actually the financial information that it shares with management and its trustee board. It's really, really important to have accurate and up-to-date financial information. For example, the latest management accounts. These usually report performance against budget and may include estimates for future periods. They should include the reasons for any differences between your financial forecasts and the charity's current financial position. And very importantly, and sometimes forgotten, it should include details of cash flow and closing bank balances. Essentially, your charity's financial position and performance should be a standing agenda item at trustee meetings and sent to each trustee before that meeting. As a trustee, you should really question things you don't understand, and don't be afraid to do that, and highlight any concerns that you have. The trustee body as a whole is responsible for your charity's finance, even if you have those in place to help you manage it. Another area of guidance that the Charity Commission has recently updated is CC12, and that's about improving your charity's finances. You can see on the slide there the various different tools that you can use, and we've talked through some of those already. So budgets and plans, looking at cash position and forecasts, thinking about your financial risks, putting in financial controls to reduce those financial risks, looking at your reserves policy, and seeking professional advice when you need it. Regularly reviewing your charity's financial position can help trustees check that your charity is operating as a going concern and that it isn't facing insolvency. And that is what CC12 largely focuses on. The earlier that you can identify that your charity is in financial difficulties, the quicker that you can act to protect your charity and its beneficiaries. If your charity is experiencing financial difficulties, or you know that the funding that your charity relies on will reduce or stop, as is happening to many at the moment due to the economic climate that we face, you as trustees will need to consider the impact that this could have on the charity and whether your charity has become or could become insolvent. Once that you know that your charity might be struggling financially but is not insolvent, you will need to monitor your charity's finances very closely and more regularly than you might have done before, using the various different processes that we've already talked about. You will need to consider what you will do in response if you don't see an upturn in your financial position and performance. Taking expert advice is critical in this area, and CC12 advises that you could talk to your independent examiner or auditor. You could contact a charity network or a membership body if you're part of one of those. They give the example of the Charity Finance Group, or you could speak to an insolvency practitioner. You do really need to consider a plan as well, and you might need to be thinking about minimising your costs. So do you have the information to tell you how you can do this? Do you know which costs can be controlled and those that are going to be fixed for a period? Do you know if you can pause certain services that you give to your beneficiaries? Or can you renegotiate any terms that you might have on current contracts, leases or loans? Can you look for additional sources of income? Can you launch a one-off appeal? Or are there any specific grants out there that you can apply for to support you? You could also considering releasing assets or funds that you have, but you do need to consider this very, very carefully. You may need to undertake some legal practices to be able to do so and check with your governing document whether it is possible to do as well. It may actually be more difficult and more costly than you realise to do this. So that's why it's really key that you involve a independent expert or insolvency practitioner as soon as you fear that there's a risk. So out of the doom and gloom now. So finance functions in the sector. We know from various different reports, and one of the key sources of this is the Charity Digital Report that gets done on an annual basis. And in fact, they've just got their request for responses for the 2025 report. So if you wanted to go onto the Charity Digital website and fill in, it would really help them gather their data for the sector. And we know that on average, 35% of time in not-for-profit finance functions is spent on what we call low value activity. So that's generally activity that could be automated or may not even be necessary to actually be done. You've got 68% of charities struggling to progress digitally, largely due to finances, headspace and capacity. That's quite a significant proportion of the sector. And then you've got nearly 50% of non-profits that are currently not in the cloud that are looking to move to it within the next 2 years. So there's a bit of a mix there. You've got some that are struggling to progress digitally, but those that know that they need to progress digitally as well. So you can see some further stats there that we've got. And I think they're quite good to, I suppose, give the state of how finance functions and digital in general is looking in the sector. And I think we're going to get more about that in our third presentation. But 1 out of 5 of charities are at the very, very earliest stage of digital. So that really means not engaging with digital at all. We've got 57% of charities that are poor at resourcing digital effectively, and 28% of charities have a board with good or excellent digital skills. So you can see that there's a little bit of a gap there, particularly at board level as well. For a number of reasons, this is a sector that is somewhat behind in its digital transformation journey. There are quite a lot of reasons for this. Ultimately, a charity's finances are significantly more complicated in general than an equivalent-sized corporate. You've got lots to think about, you've got fund accounting to think about, you've got various different sources of income, you may need to report to other regulators. So it is a lot more complicated. You've got significant amounts of additional regulation that you have to comply with in this sector, including significantly more reporting that you have to do. So a small charity's financial statements are probably about 5 times the length of a similar sized corporate entity. So you've got to get that data from somewhere. So it does require quite a lot of data. There's also a lack of capabilities in the digital space, as you can see from some of those stats up there in the sector as well. And the biggest barrier in general is the thought that it will cost too much to make this journey or start this journey. There is, when you look at the stats, there is quite a gap between the large and smaller charities, with larger charities being significantly further ahead, which may suggest that cost is definitely the overriding factor here. We see a lot of charities in our work, large and small, dealing with a significant proportion of their finance processes manually. And I haven't been to a charity yet that doesn't utilise a bank of offline spreadsheets to undertake various different finance tasks. And the finance team are usually very proud to show these spreadsheets off as well. They do like their spreadsheets. And what you do generally tend to find is that within not-for-profit entities, that the spreadsheets are potted around various different areas of the organisation, and unfortunately never the twain meet. So quite often they're showing different information. I can see some people are feeling that one. So, and actually a lot of the work that's being done on these spreadsheets, what we generally tend to find, it's either a lot of duplication. So different people are doing exactly the same tasks and quite often coming out with different answers, unfortunately. And a lot of it could actually be automated by the right finance system as well. So I suppose all of that leads me to say that improving your digital capabilities shouldn't necessarily be considered a cost. What it can do for charities is it can really free up time so that it can actually be used much more effectively in areas that add significantly more value to the organisation. Many charity finance teams spend significant amounts of time on transactional processing, and it leaves limited time for other fundamental areas such as reporting and forecasting and thinking strategically. Having a digital finance function also removes that element of manual intervention, and that actually reduces the risk of error. Having a digital system can provide a really good digital audit trail of the internal controls that are being used so that they can be checked quite regularly to ensure that they're actually doing what they should be doing. And the digital finance function can actually act as the internal control itself, and it can be used to stop transactions that need additional authority or that shouldn't be occurring before they actually occur. And the really key thing here is that what a digital finance function that can give you is up-to-date, real-time financial data on your charity, so that as trustees and managers within charities, you can be sure that you're complying with your responsibility to manage those finances appropriately. There are actually quite a lot of low-cost options on the market, some of which are charity-specific and some of which are not, but can be adapted to more simpler charities. And the way that they're generally being compiled now is that you'll get quite a basic standard package, and then they can give in various different apps which can be added on as and when you need them and depending on what activities you've actually got. So they're quite flexible. They may not be as expensive as you think they are initially. So if it's been a little bit of a while since you've looked into this and thought about this, I would genuinely have another look again. So if you are considering going digital, we've got some top tips to consider when you think about this. So I would really have a look and maybe use that internal control checklist that you've got with CC8 and have a look at those financial processes that you've got in place. And are they fit for purpose, and are they working within your organisation? All too often we see charities transfer themselves onto a new finance system, and what they do is they just replicate everything that they were doing prior to going onto the new finance system. So you just end up with the same hassle and headaches as you had before, and a system that's not necessarily fit for purpose. So what we always suggest before you move on to a new system is have a really good look at the systems and make sure that they are actually in line with what you need today. Quite often we find that, particularly in this sector, that things are done because that's the way they've always been done. But use this process as a chance to have a look, have a refresh, and really think outside the box as to what you could actually achieve. The other thing to really bear in mind is, have you got adequate training and support for any new systems that you're going to implement? I'd say that when you're talking to maybe software solutions or consultants that are talking you through implementing a new finance system, really talk to them about the type of training that they're going to offer as a package to implement your system, and also find out about the support packages that they offer, so the helplines and how easy it is to get access to those. And I would also thoroughly recommend having a conversation with those that have already got that finance system in place, to kind of like get the true life version of what it is like to use it, and also maybe to understand the pain points that they had that they moved on when they moved onto the system, so that you don't necessarily follow those routes as well. As I've said, moving to a more digital system comes with lots of benefits, so really think about those. You can have integrated reserve accounting. I think it's often thought that finance systems can't cope with reserve accounting. They very much can these days, even the simpler ones. Think about whether you need to have any digital links to any other systems. So have you got any CRM systems or any data systems that need to feed into the finance system? Can you use AI to streamline any of this transactional processing? A lot of the new systems that you've got now have actually got a lot of AI built into them, whether it's optical character recognition, so they start to read the various different invoices for you. And they're also built with kind of machine learning within them, such that they can be very clever in recognising, okay, we've seen an invoice like this before. We actually know it goes straight through to this particular expense code. It will post it there, but it will require human approval before it all goes through. So you don't have to worry about the fact that you completely lose control of where everything is going in your system. They will have inbuilt financial controls because you can put different approval levels within them. They will get emailed out to various different trustees, which can often be quite difficult where trustees are remote. So the fact that these can get emailed directly to trustees who can approve there and then is often quite helpful in this sector. And as I've mentioned before, you get a really good audit trail with these systems. So, as I've said, don't be put off by the costs, because it might seem like an initial outlay, but I think you might find that moving forward, the benefits from actually transitioning across will actually mean that you'll be saving money in the long run. So, I've put up here some key questions that you might want to ask as you're going through the process of implementing a new finance system and talking to those providers that will be very happy to talk to you, I'm sure. So you can see some of them there. Is it charity specific? There are lots of charity specific modules on the market at the moment, but I think you need to think about how sophisticated or how complicated your charity's finance are before you need to move to one of those. Is it cloud-based? And is the system well supported with a dedicated help desk? Think about asking them how old the system is as well, because quite often we've seen people move to, and I'm not going to mention names actually, I won't say it, but we've seen people move to new systems and only for it to be replaced by a new upgraded version that you can't just automatically transfer onto. You have to do a whole new process again. Have you got a plan to make sure that your staff know how to get the most out of your system? And can you get the activities that are done off system done on system? So can you start to get rid of some of those spreadsheets by implementing this new system? Another key factor that we've talked about and is key to your trustee responsibilities is how good is the reporting from these systems. One of the great things about these systems, and we find that when we transition charities across to this, is that you can get real-time information as trustees, and some trustees like to have a live link into a read-only access of the report so that they can see how things are going as you go along, and then others, you can set up reports such that they are very specific to the needs of the trustee board that we're reporting to. Then think about what financial controls could you build in? So if you've done your checklist from CC8, is there anything that you felt that you were lacking? And could this new system help you to cover that gap that you found? And then I think this is a thing that you can think, sometimes this is the bit that scares people, the automation bit and the AI bit. And what we generally find is that where that is a bit of a barrier, we'll start with the new system and you can often build this automation in as you go along. So that's a key thing to also ask when you're moving to a new system. How can you build upon it? How can you improve it? If you start with a basic level, how easy is it to add various different things in? And even simple things like a live bank feed into a finance function system, it's just transformational, to be quite honest with you, for the amount of time that it takes out of all of the processing that needs to be done. So yeah, just some questions that you could start to ask if you think about making your digital journey. Right, now to the really exciting bit. So as I've said, the FRC, so that's the Finance Reporting Council, has issued an update to FRS 102. The new FRS 102, or the restated FRS 102, I really should say, is due to be used for periods starting on or after the 1st of January 2026. So you've got a little bit of time and no need to be worried. As charities, you will report under the charity SORP, which is effectively based on FRS 102, but it gives much more sector-specific guidance to charities. At the moment, we haven't seen a draft SORP, but we are expecting that SORP to drop any day. They've promised that it will be with us before the end of March. Then that SORP will go out for consultation. So we talked about the charity digital survey that you might want to go and look for. If you're really keen to have your say on the new SORP, there is a consultation period and you will be able to make your views known through that as well. As RSM, we will be responding to the consultation. And then the SORP is due to be published by autumn 2025. So yeah, quite close to the effective date. So key changes, in case you didn't know them, and this comes directly from FRS 102. So this will affect all entities that report under UK GAAP, including charities. You've got a change to revenue recognition, but what you do need to know in this sector is that non-exchange transactions, so things like donations, legacies and grant income, is actually scoped out of this particular change. This largely talks about contract revenue, and you're going to have a 5-step plan that you need to go through to look at how you're recognising that revenue. I don't expect that to have a huge effect on this particular sector because a lot of the income that you get is actually scoped out. What will have an impact on this sector is the fact that lease accounting is changing. Previously, only finance leases would have been brought onto the balance sheet. Now, the plan is for all leases, so including operating leases, to be brought onto the balance sheet. So you're going to bring your lease liability on into creditors, which will be the lease payments discounted. And then the other side of that is that you're going to have a right of use asset in your fixed assets on the balance sheet. So it's going to have significant impact to your balance sheet and the way it looks. One impact that that could have for charities is that those that are below the audit thresholds may end up over the audit thresholds because of the balance sheet total, so because of the assets. So that's one thing to watch out for. And then this is a bit of guesswork from me because there is a public benefit section within FRS 102. So section 34 covers public benefit entities, which will go towards the SORP, and hopefully the SORP will give us a bit more guidance. And that talks about leases that contain a non-exchange transaction. And what we're talking about there are those leases that you get at undervalue. So, and it will include things like those that you've got properties on peppercorn leases. At the moment, we're waiting for the SORP to tell us a bit more about whether those that are on peppercorn leases actually meet the definition of a lease or not. Because what you will have to do is actually look at the fair value of the gift, essentially, that you're getting by getting a property at a lower value. So that could lead to some quite interesting calculations there, I think, within the sector. But yeah, we await the SORP to tell us a little bit more about that, particularly in relation to the peppercorn rent. We have also got a bit more clarity that we're going to be given across things like heritage assets, and those, they definitely scope out the need to put volunteer time in, for example, within section 34 now, which is good. And they give examples of those where it is reliable to measure the gifts that you've got. So it's a bit more guidance around that. But where they have taken some guidance away so that it makes it more judgmental is when it comes to legacy income. So previously, they said that you would normally recognise legacy income usually on probate. They've taken the usually probate out. So now you have to judge at what point you should recognise your legacy income. So they've given us clarity on some areas and they've taken it away in other areas, so that charities have to use their judgment a bit more. Even though the SORP's not out, there are a few things that you can do to start to think about how you can plan for this. And you can see it all there. And the key things that I would say you need to think about is starting to pull together your documentation for the areas that you think might be impacted. And I would say in this sector, that's making sure that you've got all your lease paperwork. Because some of the leases can be very, very old and from a long, long time ago. But it's making sure that you've got all of those tied up, those that might have really old leases with local authorities, etc., and things like that. So if you're going to have a key takeaway, it would be that. Start looking at your lease documentation and making sure that you know where it is, so that you can grab your hand to it when you need to. Okay, that's it for me.
Stand up or sit down, I don't mind, whatever works.
I don't mind.
Stand up, sit down, whatever works.
Yeah.
Okay, great. Thank you, Sharon, very much. And I think a very, very useful talk frankly, for anyone who's involved with their charities' finances, and plenty of, I think, very useful takeaways. So thank you very much for that. So we've got just under 10 minutes for questions, and we have a roving microphone, which is there it is. So does anyone have a question? Who's feeling brave? Otherwise, I'm very happy to start off with one. Any questions for Sharon? No, not yet. Okay, well, in that case, I'm going to ask you a question. So if charities are thinking about a new finance system, what advice would you have for them?
So I would definitely follow the piece where we talked about making sure you look at the controls and the processes that you've got in the first place before even if you've got no system, you will have financial controls. So it's looking at those and making sure that they're fit for purpose, because if you just take those and put them into the system, you're not going to be much further on. You really need to kind of use this project as more than just a transfer to a system. It's about looking at your financial controls overall and being happy that you're complying with CC8, and this whole process can help you do that. I would also say think about a real implementation plan. Where we've seen it go maybe a little bit awry is where there hasn't been a real plan in place that's thought of all of the different stages of putting in a new system. It's the whole fail to plan to fail type thing. So thinking about who you're going to approach to talk to about what kind of systems would be useful for you, gathering your data from other people who actually use those systems, from the implementation, at what point in the year are you going to do it, when is helpful for you, is a financial year end good, do you want to stay away from financial year end, and then making sure that you've got a training plan in place, and that if you're going to run concurrently, so you're going to run your old system alongside a new system as well. So I would really think about your implementation plan, and also think about whether actually do you need somebody else to help you with the implementation. Is this one of those areas where you need to go to an expert to help you because you haven't got the in-house capabilities? Because I would say that actually good implementation is key to a really good system as you go forward.
Yeah, that sounds like very sensible advice. And am I seeing any nods? Any questions? Anyone got any questions at this point? And I'm feeling a bit like an auctioneer. Here we have one. Yes, excellent. Thank you, sir.
Less a question, more an observation, Sharon, of course. Sorry, less a question, more an observation. You talked about the reluctance of smaller charities to make the move to digital transformation. And I'm no doubt you're right that cost is part of it. But I suspect part of it also is a reflection of society. And whilst this is a generalisation, a lot of the trustees in those smaller charities tend to be older, tend to be not as au fait with the digital revolution as those younger themselves. And I suspect that's an element of it as well within the kind of smaller charity sector. Yes, the cost, but also just a sort of reluctance, a realisation that they need to, but a reluctance and a difficulty for some of them who aren't, digital natives like some of their younger trustees. So it's just an observation as another factor that's probably holding back those smaller charities in terms of transformation.
And I do tend to agree with you on that. And then there, unfortunately, in the news where you hear about those horrible cyber crime incidents and the very different ransomware issues that have happened in some relatively big not-for-profit institutions who you would think are relatively guarded against those kind of things, won't help that thinking either. But I think it is definitely worth, though, having a look to see what these systems could do for you. And actually, the reporting that you can get out of them, it can be very pictorial. It can be very easy, particularly for those without a finance background, to understand the finance performance and position of the charity. So actually there's a lot of benefits. So you're not done to death by numbers and spreadsheets and lists of various different assets that you might have, but that you can see it really quickly, easy, diagrammatically, and that does help quite a lot of people that don't have a finance background.
Got one at the back, Ruth.
Hello. I wondered, I don't know if you can answer this question, but if you'd be able to tell us perhaps what some of your smaller charity clients are using in terms of these tools, and I appreciate you can't make recommendations, but it would just give me an idea of where to start hunting in my research, if I could understand what sort of tools you're talking about, perhaps some of the names of them.
Yep. So a really good place to start, particularly for smaller charities, and to be honest with you, that this is what we use to help our charities internally. So where we produce management information for smaller charities is actually Xero. It's a relatively low cost option, and it is one of those options that actually you can add various different bolt-ons to it. And whilst it's not charity specific, if you've got somebody helping you with the implementation that understands charity finances, and my colleague here, Gemma, does it quite a lot, you can very much set it up such that it will give you the reporting, including fund reporting, that is perfectly adequate for what you need it for. So I would say that that is very much a low-cost, off-the-shelf option that you can use. It's also got pretty good reporting package that you can adapt really, really easily. And it's one of those that can kind of grow as you become more comfortable with the system. It can cope with live bank feeds. It can also add on things like expense functions such that you can get those done automatically. So I suppose for those that might be a little bit reluctant because they're nervous about using these kind of digital tools, Xero is quite a good one because you can add tools on as you go through and as you become more comfortable with it.
So hi Sharon, we're a convert. We have a digital finance system.
Brilliant.
And we've got a live bank feed and we use it for reconciliations, etc. My question was, have you got examples where some of your clients have used it where they've got an automatic feed for their investment portfolio from Rathbones as an example?
So not as yet. What we have we've developed a separate Alteryx tool for us to be able to do that at the moment. We are a digital partner with Xero, and we have been talking to them about that very specific area. And I might defer to Gemma on this one.
Yeah, so there's nothing that would read an investment report, but what we tend to do...
Just wait 2 seconds, Gemma. Sorry. Just so we can get it on the recording.
There is no no digital tool at the moment which will replicate an investment report. But what we tend to do is use things like the reporting tools that read the bank statements, because some of the reports are like bank statements, so you can record the capital and income transactions and set up bank accounts, so you can record those, but you would have to look at the valuations separately, maybe at year end or quarter end or however you want to do it. But happy to have a conversation afterwards if you want.
Any other? We spotted another one. There we go.
I wonder what you would recommend with respect to cybersecurity software. I mean, it is something that people are nervous about. They're worrying about being attacked.
Yeah, it is, and that is...
So do you have any recommendations? Do you have any software that you know to be successful?
So that's slightly outside of my remit, but I can definitely go back to my colleagues and find something out for you. So maybe if we catch up afterwards, because we have got a cybersecurity team at RSM, so I could go back to my colleagues and find out from them.
Right, we've got another minute. I've got a question I quite like to ask. Are there any practices that you see going on that you would absolutely urge charities to stop right now? It might be difficult for some of you to ask that question.
I think, particularly in smaller charities, there needs to be a real thought around segregation of duties and how you actually achieve that. It can be quite difficult because there's often quite lean teams. So unfortunately, you can quite often see within charities some people approving their own expenses when we really need to, yes, just because there's nobody else there to do it, because quite often they are reporting to a trustee board that are remote. So actually these digital tools are really helpful in that they send that out as an email instantaneously, which can then be clicked on. So it saves that issue around having the time lag on expenses and therefore the risk of people going around their financial control, shall we say.
Got it.
Yeah.
Got it. Great. Well, that's helpful. Well, I don't approve of my own expenses.
Good.
Good. Okay. Well, thank you very much. That was great. Yeah, it's a relatively dry topic, but very nice to know it. Thank you.
Thank you.
Thank you.